Time now for today's Executive Edge. Morgan Stanley just out with a new report on venture capital, a survey finding that the vast majority of venture capitalists believe it is possible to invest in diverse founders and still maximize returns. Joining us now with some of the new data and the report and how investors can put some of this research to work in their own portfolios. Carla Harris, Vice Chairman for Wealth Management, Head of Multicultural Client Strategy Group at Morgan Stanley. It's nice to see you.
Good to see you again as well.
You got a big event coming up, too.
Yes.
Yes, you do.
Yes.
Yes, you do. Tell us about this new research in terms of how people can actually change their approach as a result of it.
Yes. Well, the report was very surprising in that we found out that one of the issues is that when venture capitalists would turn away women or multicultural entrepreneurs, fit is often the reason that is cited. But interestingly enough, easily 20% of most VC portfolios are companies that are companies you could call that have expansion risk, things that they don't know about, that they spend the time doing due diligence, that are very new markets. So think 20 years ago, think about software as a service or cloud computing or more recently, driverless cars. But yet, when they see markets that are represented by these entrepreneurs that might fit a certain demographic, they say fit. So our thought was, perhaps you should change the lens and start thinking about some of the companies that are brought to you by women and multicultural entrepreneurs as things that could represent expansion risk and do the due diligence and make some of those investments.
So, but can we just be plain about it? Is this do you think this is just racism? What's going on here? When you say fit, and that's the rationale for why they're passing on the investment, right?
Yes.
What do you think the real rationale is?
What they cite is that the company doesn't fit with the other companies that are in their portfolio, or perhaps this entrepreneur has a different profile than some of the entrepreneurs that they have traditionally invested in. So I can't really just blame it blanketly, Andrew, on racism.
So what do you think it is, though? That's what
I do think it's the way they've been thinking about it. Historically, this doesn't fit with the portfolio yet. These other things that I mentioned, cloud computing or driverless cars, at some point they didn't fit either because they were new industries. And what I'm suggesting is that the industries that are represented by some of these entrepreneurs are new. So think about hair care products for a certain demographic. Think about a company like Dual Security, which is really about two-step authentication. That wasn't around for a while, and that company was sold for reportedly $2.35 billion to Cisco. Where were the VCs investing in that?
Right.